Assalamualaikum warahmatullahi wabarakatuh. We are from Ataran Management Consulting. I am Eksanti Anggraeni Saputra and my friend Nabila Intan Alifya. We will present about common size analysis of NANNO Company.
Before we get into our analysis, I'm gonna tell you about a brief profile of the Great NANNO Company. So the Great NANNO Company was established 5 years ago with 5 different business units up until now. So the oldest business units, which is the nano property, was established 5 years ago, and the latest business unit is the nano banana chips, which was established a half year ago. The 5 different business units are: the first one, the nano farm; the second one, the nano property; the third one, the nano bakery; the fourth one, the nano banana chips; and the fifth one, the nano mart. So each business units have different business process, and we as a consultant will give our analysis for 5 different business units itself.
And here we have the table of content of our analysis. First, liquidity ratio. Second, solvency ratio. Third, activity ratio. Fourth, profitability ratio. And the last one is summary. Here we have liquidity ratio, but before I explain you about the liquidity ratio, I will explain you first what is common size analysis. Common size analysis is an analysis technique by making comparison between certain financial statements which are prepared by calculating each account in the income statement and the balance sheet. And the aim is to find out company's capital structure and company's funding. And here we have data of net profit of NANNO Company, and we can see that the farm sector in NANNO companies has the highest net profit, even though its sales are lower than property sector. This is because the farm sector is better to reduce their cost of goods sold, the amount of their cost of goods sold, better than property sector. And we can see also the mart sector has the smallest net profit, even though the number of their sale is still above the banana sector. This is because the banana sector is more able, more better to reduce their cost of goods sold, just like the farm sector. And here we have a liquidity ratio of NANNO Company. We have data of their current ratio. What is current ratio? Current ratio is ratio that compare between company's current asset with company's current liability. And we can see from this chart that banana sector has the highest current ratio compared to the other 4 sectors, and it means that the banana sector is the best sector in managing to cover up their current liabilities by their current asset. But the other 4 sector is also good because their percentage of current ratio is above 100%, so it means that the other 4 sector also can be cover up their current liabilities by their current asset. Next, we move to the another explanation of ratio analysis of NANNO Company. Here we have solvency ratio. First, I will explain you about debt to equity ratio. Debt to equity ratio is ratio that compares between the total liability of the companies and their equity. And from this chart, we can see that the mart sector is the best sector compared to the other 4 sectors because the amount of the total liabilities of mart sector is remains under control. So the difference between the total liabilities and their equity is not too far. And because the smaller the total liability ratio is better, and we can see that the mart sector has a percentage exceeds 50%, and it's not really good for this company of this ratio. So the market sector should be to put more pressure on the amount of the total liabilities. And we can see that the bakery sector is the most difficult sector to control the debt to equity ratio, as seen from the largest percentage among the other four sectors. Next, we move to the another explanation of solvency ratio. Here we have debt to asset ratio. What is debt to asset ratio? Debt to asset ratio is ratio to measure the percentage of the amount of funds originating by companies' debt, both short-term debt or long-term debt. And from this chart, we can see that the mart sector is again be the best sectors compared to the other four sectors because the percentage of the mart sectors is below than 50%, which is 40%, and it means that the level of the security of funds in the mart sector is safer or more safe than the other four sectors. And we can see that the bakery sector is again to be the most unhealthy debt to asset ratio because the magnitude of its percentage is above 50%, which is 70%. So we can say that the 70% of the funding of the bakery sector is from companies' debt, and it's not really good for the company.
Next, activity ratio for the Great NANNO Company. So we have two different ratio in this section. The first one is the fixed asset turnover and the second one is the total asset turnover. So asset turnover itself is how the company manage their asset to generate their sales. So as we can see in the chart, for both of the ratio, the marked section have exceeded 100%, which means that they have efficiently used their asset to generate their sales. And meanwhile, for the farm section have the lowest percentage in both of the ratio, which means that they have a low performance in this activity ratio. Next, profitability ratio. So we have four different ratio. The first one is net profit margin, the second one is gross profit margin, the third one is return on investment, and the last is return on equity. So I'm gonna tell you about the first two of the ratio. The first one is net profit margin. So as we can see, all of the section have shown a good result in this ratio because all of the section are positive, and which means that the company doesn't experience loss. And for the best performance in this ratio is the farm company because they have the highest percentage of net profit margin, which means that the section have contribute bigger net profit to the company. The second profitability ratio I'm going to explain is gross profit margin. So as you can see in the chart, that farm section again have the best performance because they have the highest percentage on the gross profit margin. Meanwhile, both of the mart section and the property section have the lowest percentage because of their cost of sales that didn't have that much different from their sales. And they will affect their gross profit margin. And for the gross profit margin, we can see that all of the section have the positive result, means that their cost of sales didn't exceed their sales. So the next profitability ratio are return on investment and return on equity. As we can see, both on the ratio, the sections have shown a poor result because they don't exceed the 100% percentage of the ratio. This means that the company have failed to efficiently use their investment, in this case asset, and their equity or their investors fund. And we can see that they don't meet their expectation because all of them are below 100%. But in this case, the banana section have shown a higher result than the other 4 section on both return on investment and return on equity ratio. So this is all of the ratio for the profitability ratio. As we can see, the farm section have a good ratio in both of net profit margin and the gross profit margin. Meanwhile, in for the return on investment and return on equity, banana section have the highest ratio amongst of all of the section. So this is the result of all of the ratio in the Great NANNO Company. As we can see, the Mart section have shown a better result and the best result amongst of the other section, even though their sales decreased compared to the previous year. And meanwhile, for both of the property section and the bakery section, don't really have the best result on all of the aspects on the ratio. And I think for us, the consultant, I think it will be great for the company to increase their usage of their asset and investment, because as we can see that the return on equity and the return on investment on both of the ratio don't exceed 100%, which means the company didn't efficiently use their investment, in this case asset, and their equity. So this is the rank of the sections in the company. As we can see, the first one is the Nano Mart section, because even though their sales are decreasing for 0.1%, but mainly their aspects in their financial ratio analysis are good, and the highest amounts of all of the sections. And for the lowest is the bakery section, because their inability to manage their liability, especially their debt. So I think it will be great for the section to manage their liability or their debt in the future and decrease their liability in the future, because as we can see in the solvability ratio, their debt ratio and their debt ratio is so high compared to the other sections. And that's all from us, and thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh.